Hey, financial freedom seekers, Simon Dixon here, and today I'm going to be talking about a weird concept called IOU tokens. Now, IOU tokens were first created when in 2016, Bitfinex, a cryptocurrency exchange, was hacked for 119,000 Bitcoins. Bank to the Future, the company that I co-founded, worked with the Bitfinex team in order to use a token that was built on top of Bitcoin in order to represent a debt and try and reinvent the traditional bankruptcy proceedings. If you'd like to understand a bit more about how it works, just simply go to YouTube and put in Bitfinex hack recovery, where it's an old video, a whiteboard video where we outlined exactly how it worked. Now, the innovation here was that you essentially, rather than going through the process of liquidating and closing the company, there may be an opportunity to get a much better result for those that are being affected by it. And really, bankruptcy is when you have more liabilities, money that you owe to people, versus the assets that you hold. And in that situation, you have to disclose that you have more liabilities than the assets that you hold, and you either go into bankruptcy because you are insolvent, or you find a way of reorganizing so that you can fill the hole so that the assets that you hold can be equal to the liabilities or more if you succeed in recovering the company. So if you think about it, a balance sheet is simply a bunch of things that the company holds as assets. It could be cash in a bank, it could be machinery, it could be all sorts of stuff. And then you have liabilities, which is things that you owe to people. Now, the interesting thing about banking is if you've been watching any of my videos over the last decade, the magic of fractional reserve banking is that banks get to actually create money every time they issue a loan. So what they do is they put both an asset and a liability on the balance sheet at the same time. It's an asset because essentially they can take that deposit and lend it out and receive interest, which would be part of their profit or their revenue. And it's also a liability because it represents a deposit that someone can come along and draw. And this is what allows a bank run to occur because the double bookkeeping is where money is created through the fractional reserve system. But if the asset doesn't actually exist there, then you can end up in a scenario where people want those assets back, and the bank cannot meet those liabilities because they might be either don't exist, which requires a license in order to do that, or those assets are actually deployed and invested in something else, and therefore you have a liquidity issue as opposed to a solvency issue. So rewinding back to 2016, so Bitfinex was insolvent. It owed 119,000 Bitcoins. They were hacked, they were disappeared, they could not access them. So they had to suspend withdrawals, and once they suspended withdrawals, they said, here's how much money we owe you, but we're not gonna go into bankruptcy. Instead, we're gonna issue you a token. And that token is an IOU token. And the way the IOU token worked is for every dollar that Bitfinex said that they owed you, you had a token. So at the time it was approximately $72 million, and therefore 72 million tokens were issued. Those tokens were then tradable upon the Bitfinex platform. It was in fact the first security token. So nowadays that would all have to be done in compliance with securities laws. At the time it was very innovative and there was a lot more clarity and certainty on what types of, how those things would be classified. So you create a security called an IOU token. And now those, once you open up for business again, you've got enough assets to meet those liabilities. So anyone that doesn't want to use the exchange can withdraw and get out. Or they can take that token, they could withdraw it and hold it for another day, but it represents a dollar that can be repaid in the future. Now this traded on the market and immediately it crashed to about 30 cents because all the people that wanted out dumped the token, and it had about a 70% correction. And then other people that came in and believed in Bitfinex's future was able to purchase that token for 30 cents on the dollar. And it represented a promise for Bitfinex to pay you $1. So if they repaid that dollar, then you had approximately a 70% profit to be made if you believed in that promise to repay. In order to repay that, the business had to have a viable plan in order to generate enough revenues in order to repay that token. Now, there's been a few iterations on top of that more recently, but here's the key part of it all. It worked because you were able to swap it in for equity in the company. And so the community was able to become a shareholder in the company, which means that when you could buy the token for 30 cents from the people that didn't believe in its future, you could swap it for $1 worth of equity. Now that gave people the paper value of a 70% upside. You could buy it for 30 cents and you can convert it for $1 of equity. Now the key question on that is the equity valuable? Well, that really depended upon the ability for the company to reopen, its regulatory compliance, its ability for customers to trust it again, its ability to come out of this process. And therefore, if all of those can be checked, the equity could have value in the future. You could become a shareholder in the company. And if the company decides to repay its debt, so it would pay its debt first, it can then, if it's profitable, pay dividends in the future, which Bitfinex did. So the debt was about 55 million of it was converted, and we did a conversion pitch on Bank to the Future where people could take their IOU and they could convert it for equity in the company and use it as a payment mechanism where essentially you swap one security token for a security which is equity. And the more that it was converted into equity, the higher the price of the token went, the more Bitfinex was able to repay, and the hole got smaller and smaller and smaller until eventually everything was converted to equity and the token was burnt, or the debt was repaid and the token was burnt. And then Bitfinex officially was able to recover, get back to business. It led into the 2017 bull market, high risk, high return. Things worked out, and then the shares were tradable on the Bank to the Future secondary market to qualifying investors. At their peak, those shares went up to a high of $16. So those that bought the claims, the IOU tokens, for 30 cents, if they bought it at the bottom, and obviously very few people did that, but just to show the maximum upside, were able to sell those shares for 16 cents, and they received hundreds of millions in dividends in the meantime, making it one of the most successful recoveries that I know of in financial history, and it was all done in a very quick time frame. Now, more recently, in the latest bear market, other companies have been suffering from bankruptcy issues. One of those was a company that I was a shareholder in, which was Celsius. I was also a creditor in that company, so I had tens of millions of my personal funds on the platform, and also I was a shareholder, and the company that I co-founded also pulled together investors that wanted to invest in their early rounds, and that was why I was involved in Celsius. And so immediately when we realized that withdrawals were being suspended, we contacted the Celsius team and presented to them this IOU token concept and how to make it convertible to equity, and what you needed to do and what has changed in the market and how you need to comply with securities laws in order to make that happen. So we presented this plan, but unfortunately it moved into the Chapter 11 process because there was a lot of disclosures that meant that those things had to be disclosed in order to make sure that everything was being presented. The lawyers knew that if it was misrepresented, the equity, then it would be a big legal challenge. And so there was a big internal battle in order to try and get the correct level of disclosures in order to move into this process. And so that's what we've been debating back and forth, and why I've been uploading loads of videos with me communicating with the community on different types of things to consider, and just really using this as an opportunity for everybody to gain a really, really sound financial education and understand the concepts of assets, liabilities, equity versus tokens, securities versus utility, and compliance versus non-compliance, banking regulations versus securities regulations versus DeFi versus exempt from regulations, and this mishmash of all these different things that I've been involved with for over a decade and had hands-on experience, having worked with and been a shareholder in over 100 companies in the industry that have gone from shares to DAOs to bankruptcies to restructures to issuing IOU tokens to corporate actions, to getting shut down by regulators, to securities laws, to utility tokens, to all the different types of investment contracts and everything in between. And so it's been an amazing opportunity for everybody to gain a financial education and also learn the hard lesson of diversification. Unfortunately, there were many people that were misrepresented on the risk of this type of investment, and therefore they unfortunately ended up with their life savings in there. And there has been tragic cases, and really the community has been trying to support each other through these really challenging moments in constructing an effective recovery. Now, more recently as well, a mining pool also had a similar issue where they had to suspend withdrawals, and therefore they implemented the same plan, and there were a couple of others that I can't talk about that started working on a similar plan as well, and started getting all the approvals that are needed in order to execute that, giving us a lot of information on the types of things that regulators need to know and understand in order to make this feasible. So we've been pulling in all of that experience to try and support this process, but the key thing is making sure that the equity on the other side is of value and can make that IOU token something that works. And that is really the key thing to consider in whether this strategy can work, because if that can't work, then you could end up with a much, much worse outcome where if the company's unprofitable, lots of cash being burnt and various other things, and therefore moving to an alternative restructuring plan. So that is the concept of the IOU token. The mining pool essentially took all the different types of crypto assets, issued an IOU token and allowed it to be convertible into equity in the company, or purchase mining equipment, or be converted into the underlying asset that backed it. So I think it's going to be really, really interesting seeing where all these things comes next. But the reason that I wanted to create this video now is because it was leaked by a Twitter, one of the creditors, one of the victims of Celsius, that received a video from an internal meeting where the presentation that I gave was being repackaged into an internal recovery plan explaining the IOU token, but it did not have the convertibility into equity into it. And so therefore I wanted to make sure that everybody understands some of the key components that make this work, and also the additional challenges that it's in a US Chapter 11 process, and understanding some of the things that need to happen in order to make this work. So full disclosure, I ended up a shareholder in Bitfinex and benefited from that process. Bitfinex, a partner company, Tether is also one of the companies that issued a large loan to Celsius, and may, or if it doesn't get through a recovery, may be involved in some kind of clawback process. I'm a shareholder in Celsius, I'm a creditor in Celsius, and also I'm the co-founder of banktothefuture.com, which has been supporting from when Bitcoin was simply 100 people in a room in 2011 when I first gave the presentation, to investing in companies and supporting companies to the point where they become $100 billion IPOs and stuff. And we allowed the community to benefit from all the upside of being a long-term investor with a lot of failures along the way, a lot of lessons along the way, and many regulatory and securities laws reforms in order to make all of that possible. So I just wanted to disclose that. And I will keep uploading videos to support you in understanding some of the nuances involved in this case. It really hit a pinnacle last night when Alex Majinsky, the week before, the CEO of Celsius, came out and broke his silence, made all sorts of allegations rather than apologizing, and also came out again yesterday. And I think on Twitter, people are circulating this conversation because a few questions were being asked just based upon the style that Alex used in order to attack before. So really, I do believe that there is a great outcome for creditors, but we need to make sure that we're maximizing all of the assets for the interest of creditors, which is the goal of the Chapter 11 process, and there's a nice process set up. And that's what I'll continue to support and continue to upload content on. So I hope this was useful in understanding the IOU concept and understanding how financial innovation can be used in order to put together pretty antiquated processes, work within the confines of the regulatory and legal system in order to put together potential great results. Now, just because it worked for Bitfinex, it doesn't mean it can work here. And there is risk involved. Always remember the first rule of the market. Remember what I teached in the video on recovering from financial disaster? You have spending money, take care of that. You have savings, pay yourself first. Your savings, if they're invested in hard asset, in hard money, end up being in a position where you can potentially start investing. This fits in the investing bucket and the saving bucket. And then you can work on contribution because financial freedom allows you to contribute to the things in life that you think are most important. So always remember, in the investment bucket, there's always risk. And the rules of the market are as follows. And it should always be understood. The higher the risk, the higher the return. The lower the risk, the lower the return. What happened in the Celsius situation is high returns were given, but the promises of low risk were given to people. And that's where you've got to be very, very careful when you see the high risk, but low, the high risk, but being represented as low risk, but high returns. Okay, I got it out there. Low risk and high returns is what you've got to really be careful of. That's where people get burnt, and that's where people tend to chase returns. Why? Remember other videos that I've covered. Because most people vastly underestimate what is possible in 10 years and overestimate what is possible in 1 year, and therefore chase short-term opportunities, have no financial plan, don't understand the different buckets between allocating your portfolio, and don't diversify, so they get blown up into one thing by investing just alongside their ideology rather than risk managing for being wrong and different scenarios. As always explained at retirementplanb.com. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are getting really hurt, some are doing really well. I want to make sure that you're on the right side of this change, and I want us to do it with peace, with love, and with unity. And I'll continue to give more content on this journey, and I'll see you on the other side. Peace.